This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're tipping on June 29th, 2017. Our time is 9:08 Mountain to start the radio program. Now, I should remind you, this weekend is a long weekend here in Canada. Happy Canada Day, 150th Canada Day on Saturday. 4th of July to our American friends who listen to the radio program. Happy 4th of July on Tuesday. If you ever miss a radio show, remember, they're archived on Harold's website, rarecoloreddiamonds.com, and we have a podcast through iTunes. Type in The World Financial Report on Radio. You will find us there. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. The telephone number, 1-800-432-1022, 1-800-432-1022. Our featured diamond of the week, a 0.46 carat paracut, fancy intense purplish pink argyle. This is a beauty of a diamond. See it at rarecoloreddiamonds.com. Featured diamond of the week. We'll talk more about diamonds in the second half of the show. As we start today's program, we're taping on a Thursday. The Canadian dollar is trading near its highest level since the start of February as investors place their bets ahead of a hotly anticipated Bank of Canada rate decision next month. The loonie reached a high of 76.89 US overnight. It hasn't hit 77 cents since February 2nd, and it hasn't closed above that threshold since September of 2016. The currency has, at this point, the wind in its sails, thanks to the central bank's top decision makers who have been gearing up investors for a possible rate hike. The implied probability of a 25 basis point bump on July 12th is hovering around 66%. And Pelosi, the head of the Bank of Canada, we'll talk more about it after Harold's commentary was on CNBC. And we'll give you an update on what he had to say there. But, Harold, I would be very surprised if they raised interest rates. With what's happening with the oil market, the housing market, they must be very, very confident about the economy to raise interest rates at this point. I would think that maybe they would hold off for a little bit more. The anticipation was they wouldn't raise rates until after 2018. Now they're looking at raising rates here, July 12th, seems a little strange. So we will have to see exactly what happens on July the 12th, and a story we will continue to cover. We will keep you up to date. What's happening in the financial markets from your point of view?
Well, actually, the markets are very slow. It's been boring, to be honest with you. And with a long weekend coming up in Canada and a 4th of July coming up in the United States, not a lot of traders around right now. I think that at this point here, we're going to see a quiet end to the week. Gold's been trading in a range. Everything's really been trading in a range except for oil, which has been falling off. As far as a rate hike in Canada, it makes absolutely no sense to me. What in the world is a quarter point rate hike going to do? Especially with the oil market plummeting, commodities down, and the real estate market in trouble. It makes no sense to me. I truly believe that it's just a little bit of jawboning because, again, a 0.25% interest rate hike is not going to do a thing. And if that's what's raised the Canadian dollar at this point, to me it only means that the dollar is going to fall that much more. At this particular point, there's not a lot of things happening in the current event markets. We haven't heard a lot from North Korea in the last week or so. President Trump has not gotten anything passed yet. However, they're starting to give him some allowances on this travel ban type of thing. As President Trump starts to get his foothold and starts to get into some of the things that he's going to be able to do, his strengths, which are rebuilding the infrastructure of the United States, the roads and the bridges and the things like that, you're going to start to see some strong rally in the U.S. dollar. And even though the Canadian government has talked up the Canadian dollar, which again doesn't make sense to me because Canada wants a weaker dollar for export purposes. It makes their exports that much more appealing financially. So that makes no sense to me, Randy. I don't see why that would happen. And I don't see that it's any change in the marketplace whatsoever. What I do believe is going to happen is that if they don't raise interest rates, then the market is going to take a pretty heavy fall. And I do believe that as President Trump continues to find his foothold, in his job, that he's going to do a much better job. So at this particular point, it's the summertime. Summer's notorious for slow markets. Not a lot of traders around this week because of the holiday in Canada and the holiday coming up in the U.S. And again, at this point here, gold is trading in a range. I like gold right now because of the potential of what's going to happen with North Korea. I just don't see that situation going away. I really don't. So if that's going to be a situation that we have to be concerned about, we need to be in gold. We need to own some physical gold, and we do offer gold to our clients, but at this particular point, only in kilos, which excludes a lot of people at this particular point because a kilo, which is 2.2 pounds or 35.15 ounces, right now is worth just a little bit over $40,000. People are looking to buy lesser quantities of gold. We don't have that available at this point. Go see my friends at the West Edmonton Coin and Stamp, my friend Jack. He'll help you out there on smaller coin purchases and things like that. But if you're a larger gold collector, we have kilos of gold. They're 99.9%. They're magnificent. You can buy them at the bid price, no ask, bid spread, and no commissions. We think at this particular point, even though the U.S. dollar I'm expecting to continue to strengthen, even though it pulled back a little bit over the last couple of weeks, I still do believe that we need to own gold because of the potential events that could be coming, especially a situation with North Korea, because Japan and South Korea are getting extremely concerned about the missiles that North Korea are actually firing off, and the thought is that it's potential that one of these missiles could literally hit the U.S. mainland. So there is some concern there, and if that is going to happen, I don't see Trump backing down from that, and I do see that as a potential problem that could move the price of gold possibly as much as $300 to $500. So again, for larger purchasers of gold, we think that we need to own gold in our portfolio. We've got gold at spot price, no spread, no commissions for our larger clients. It's an excellent time to do that. As far as what's happening in the rest of the world, there's really nothing much happening at this point financially that is going to change the markets over the short term. As I said, the summertime is a bit slow. 2 long weekends coming up this weekend, so we think that the market will continue to trade in a range. However, we must pay attention because even though the markets are slow during the summer, there are current events that could move these markets substantially, and we need to stay on top of them. Myself personally, even though I'm in Colorado for 4 months, I trade the markets every day, speak with clients on a day-to-day basis, and I'm always available to speak to new clients that are concerned about their financial situations. If you're not making money at this point, we have private investment programs that can help you. Some of our clients, or most of our clients, are making over 25% a year in U.S. dollars. If that will help you towards retirement, towards further income, towards just making more money, we have those programs available for our Canadian clients. Give me a call. I'll spend as much time with you as you need explaining how these programs can help you and what the potential is for you. So, again, at this point, Randy, I highly doubt that there's a strong reason to raise the Canadian dollar. It makes no sense to me at all. And one interest rate hike is going to do absolutely nothing. So I would say that if they did raise it, it's built into the market. If they don't raise the interest rates, the market's going to fall substantially over disappointment.
The story that we have in our free weekly newsletter, if you would like to connect with Harold, speak with him personally, privately, 1-800-432-1022, 1-800-432-1022. Call is free, anything discussed confidential. The website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. Low interest rates have done their jobs as Bank of Canada's Pelouse. Central Bank's next interest rate announcement is July 12. The governor of the Bank of Canada says it looks like low interest rates put in place in 2015 have done their job, but he stopped short of predicting the central bank's next move. Stephen Pillow said in an interview broadcast on CNBC, the business channel in the United States, that the Canadian economy has been recovering from the global financial crisis that erupted in 2008 and the sudden decline in oil prices that began in late 2014. The Bank of Canada's next interest rate announcement is set for July 12, when it will also release an updated outlook for the economy in its monetary policy report. Pillows made the comments in Portugal, where he was participating in a forum hosted by the European Central Bank. He says virtually every major area of the world seems to be gaining economic momentum, with the United States way out in front. He says the drop in oil prices set Canada's economy back, causing the Bank of Canada to compensate by lowering interest rates, but growth has returned to a more normal pace. So if you'd like to read that story and more, connect with Harold, get our free weekly newsletter, the companion to our radio show. You'll be on the same page that Harold and I are on. Get that story and more. 1-800-432-1022. The website, rarecoloreddiamonds.com. And I agree with Harold. I don't quite understand why they'd be raising rates at this point. It doesn't quite make sense. But we will have to see. One of the other big stories of the week, it is in our free weekly newsletter. Mark Faber. We've talked about Mark for quite some time. He's a prognosticator out of South Africa. He says it's going to end extremely bad, with stocks set to plunge 40% or more, warns Mark Dr. Doom Faber. If the man often hailed as the original Dr. Doom is right, the stock market could see another lurch higher, at which point investors may want to cash out quickly and run for cover. Mark Faber, the editor of the Gloom, Boom, and Doom report, and a perennial bear, isn't backing down from his latest dire prediction that would send stocks plummeting 40% or more. A drop of that size could take the S&P index down from Friday's close of 2438 to 1468. He used the meteoric rise of FANG stocks, and if you've heard that and not too sure what it means Facebook, Apple, Netflix, and Google, and they throw Alphabet in there as well. Google is Alphabet, as a glaring bearish signal. We've had more than 8 years of a bull market. The NASDAQ is being driven by very, very few stocks, said Faber. And that rally is not a particularly healthy sign from a technical point of view, and valuations are very high. Faber's comments come exactly 2 weeks after the NASDAQ set its latest intraday record high of 6341.70. You know we have a lot of volatility, and when things will start to go down, they'll go down a lot. Faber is deeply concerned that wealth is flowed to big corporations and affluent people. He believes the imbalance could eventually disrupt the markets as we know it. Either people with money will be taxed heavily, or we'll have a massive deflation in asset prices. I repeat, massive, he warned. Eventually the system will break. Faber is known for correction calls over the years, which have never materialized, but he's sticking with his latest call, acknowledging critics have questioned my sanity. We have printed enough money that the Dow goes to 10,000. All I'm saying is it will end very badly, extremely badly. And we have an article that I would encourage people to read in our free weekly newsletter. Madoff whistleblower Harry Markopolos. You might have seen him on 60 Minutes or other programs. He was the one who really realized that Madoff was a fraud. He says the U.S. government is a giant Ponzi scheme. A full-blown panic is coming, and journalism is dead. And Harold, now is a time where there are a lot of people coming out, and you have a Markopolos who figured out that he was a fraud. Madoff was a fraud, so he's got a lot of credibility. You have to take these people serious when they say that we need to be prepared at some point for a pullback in the stock market, because you just never know what could happen. In fact, you have somebody like a David Stockman, and Stockman says that he believes one of the things that could trigger the pullback. We're heading for an expiration of the debt ceiling and running out of cash in the United States. That will create an enormous crisis by August or September. They're not going to be able to cope with it. I think the odds by the day are increasing. They're going to have a government shutdown. Expect the mother of all debt ceiling crises. The market is utterly unprepared, and it really is the orange swan that is about to take Wall Street by surprise. And Harold, the truth of the matter is we don't know the time, we don't know the date, but at some point these markets will pull back, and people need to be prepared, and they need to have an insurance policy in their portfolio like gold and diamonds.
You better believe it, Randy. Again, it's really quite frightening to think what the potential is. And again, where Trump is a good businessman, he's not a politician. And the fact is that it's possible that some of these situations could happen. Now, I don't believe that what Mark Faber is saying at this point here is going to happen. What I do believe is going to happen is that if they have to go back to printing money or whatever, they're not going to let it fail. Is it possible that the stock market can drop 40%? Of course it is. We see it happen probably every 6 or 7 years. So it's happened many times before. It's recovered in the past. They've done the right thing. The last one in 2008 was impressive. Let's face it. The Dow dropped from 14,000 to 6,500. And there was panic and derivatives and all those situations were hitting. Lehman Brothers went under. Bear Stearns went under. Almost all the corporations had to be bailed out. But they did it. And they righted the ship, and now the Dow is over 21,000. So, the fact is that there's a lot of situations in the market at this point that are concerning. To me, the most important and the most concerning of all is the derivatives market. They don't know how to deal with a derivatives market this size because it's unregulated, and you're talking, it's in the quadrillions of dollars. That's where I see a potential. A pullback in stocks, we get it every 6, 7, 8 years anyways, and always been able to deal with it. The thing that concerns me is the inexperience of Trump as a politician, not so much as a businessman. So again, where there is potential, and there is certainly potential, and we've talked about it for a long time, that's why you need to own the right type of investments that will hedge you against a massive drop in stocks. Now, personally, if you listen to the show, we don't trade stocks. I haven't owned stocks since 1999. It's not something that I do because, again, most people that trade stocks lose. 90% of the people lose, and it's not a market that the odds are in our favor. Plus, it's manipulated. There's a plunge protection team that is intact from the government that will stop the market from actually doing certain things, and that's not a market that I'm comfortable with. A market has to trade on its own volition. If it drops for a specific reason, and there's investors in the market that are betting that the market's going to drop. So why should they not have a chance to prosper just because the government feels that it's imperative that the stock market continue to move higher? That's not a free market. That's happened in the commodity markets, especially between 2008 and 2010 when all hell was breaking loose. And again, we saw things happening in the market that were totally illegal. So those are the type of markets I shy away from. I don't like to trade in a market that is fixed against you. And that's what I feel. Even though the stock market has hit 21,000, most people are not in the stocks that made that kind of money. So, again, at this point, you need to diversify. You need to own the type of assets. That's why we're talking about gold again. We captured the largest bull market in gold ever in history. There was nothing like it. When we recommended gold in 2000, the price of gold was at $250. By the time the run was over in 2011, gold was at $1,900. People made absolute fortunes in that market. And the fact is that it was the government that manipulated the price of gold and silver down after 2011 when it should have been trading as high as $2,000 to $2,300. So again, at this particular point with what's happening in North Korea, with the potential of derivatives and other markets in the United States going against us, yes, you need to own rare colored diamonds. You need to own physical gold. You need to own the type of assets that are going to offset the losses that you're going to see in paper assets. And there's no doubt that that's going to come again. It happens on a regular basis. The fact is that if you're older, though, if you're in your 60s or 70s, you won't recover this time. So the fact is that you may want to back off of the paper-related investments that you're in and start looking at alternative assets that are outside of the paper market. We have programs and investments in private investments that include rough diamonds and those type of programs that our clients make over 25% a year, and all those investments are based in U.S. dollars. So at this particular point, yes, there is concern out there. There is no doubt that we could wake up one morning and find the price of the stock market down 1,000 or 2,000 points. It can happen. We've seen it happen many times before. We need to own the type of assets that are outside of that are going to protect you if and when that does happen. And there's no doubt that it is going to happen again. And when it does happen, we're going to take advantage of it, as we have on many other cases. When the markets have fallen and give them a chance to fall out of bed, we've been able to capitalize on other markets that have made our clients a ton of money. So, again, as these things unfold, we will report them to you, we will analyze them for you, and let you know what your best position is in order to take advantage and financially benefit from it.
Featured Diamond of the Week from rarecoloreddiamonds.com is a .46 carat paracut fancy intense purplish pink argyle. See it online at rarecoloreddiamonds.com. Featured Diamond of the Week. We'll talk more about diamonds here shortly in the second half of the show. It was interesting to note this week that, and we talked about it in the past many times, that the state of Illinois is in severe financial difficulty. Illinois in danger of entering financial death spiral. Illinois could go down in history as the first U.S. state with a junk credit rating. The rating firm Standard & Poor's says it will probably give the state that embarrassing distinction if lawmakers fail to reach a budget deal by the start of the fiscal year on July 1, and they haven't for 3 years in a row. Illinois is already in a severe budget crisis with $15 billion in unpaid bills, $250 billion owed to public employees, and cash levels so low that soon it won't be able to pay lottery winners. And a downgrade almost seems like it's going to happen. So there you have it, a state in the United States, Illinois, death spiral. We also talked about in the past bank bail-ins, and that is the law. The law is that if a bank goes south, it closes. Then what's supposed to happen is those that are up to a certain amount of money, they will keep that money. Anything over will be taken, and those folks will get shares in this new entity, a new bank. Well, Italy is pouring billions more into its troubled banks, in fact, putting in $19 billion to avert a fresh crisis in its beleaguered banking system. And it's interesting to note they did not follow the law, which is the bail-in law, where they take money from the depositors. So they actually broke the law in that instance. Read more in our free weekly newsletter. Connect with Harold at 1-800-432-1022. The website is rarecoloreddiamonds.com. We'll come back and talk about diamonds. The World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on June 29th, 2017. Our time is 9:34 Mountain. We say Happy Canada Day. Canada Day long weekend. Canada, 150 years old. And we are so proud to be Canadians, Harold and myself, and do our radio show for Canadians, helping Canadians make money. And that's what the show is all about, answering your financial questions and helping you be in a position where someday you can retire. And we're proud to do our show here in Canada on 630 CHED in Edmonton. 150 years. And if you ever miss a radio show, they're archived on Harold's website, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. We're portable. We go anywhere you do on your portable podcasting device. And to our American friends, we have a lot of people who listen to us via Herald's website all around the world, and we're saying all around the world, in Asia, Europe, just anywhere you could imagine. We have people listening to us. But in particular, happy 4th of July to our American friends on Tuesday. And yes, the United States celebrating its birthday as well. Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com. Telephone number 1-800-432-1022. 1-800-432-1022. And we encourage you to take a look at our featured Diamond of the Week. It's a .46 carat paracut, fancy, intense, purplish pink argyle. Paracuts are one of my favorites, and you can see it at rarecoloreddiamonds.com, featured Diamond of the Week. And Harold, this is an absolute gorgeous, gorgeous diamond, and one, if a person was starting a diamond portfolio, would be perfect to add to the collection or start. And if you were looking to maybe have a piece of jewelry, this would be very special in a ring. It is very, very beautiful.
Certainly is, and it's an argyle pink. So the fact is that this diamond has a tremendous amount going for it. Number one, it's a magnificent color. Now, as far as pink goes, there's several different colors pink: faint pink, light pink, very light pink. We don't deal in those. Investment quality pinks start at fancy lights, which are really beautiful. We've had some fancy light argyle pink diamonds that were absolutely gorgeous because they were very soft pink. But then you get into the stronger saturation colors like the fancy pink, the fancy intense, which this one is, purplish pink, and then you've got the fancy deep. It's interesting to note that if a rough diamond turns out to be fancy deep, it could possibly be cut down to a vivid or sometimes a red. So, and we've done that in the past, but it had to be with a fancy deep pink diamond. Extremely, extremely rare to find one. And then the rarest of all, and the heavy saturated and the most expensive, are the fancy vivids. And all of these diamonds that we're talking about come from the Argyle mine. The Argyle mine in Western Australia produces 95% of the pink diamonds in the world. By the way, that's a very, very small number. It's so small, most people have never seen a pink diamond. Pink diamonds are one of the best investments you could ever make, and now the mine that produces 95% of them is closing because it's not producing anymore, so it's not making enough money to keep going. It's owned by Rio Tinto, and they said 3, 4, 5 years ago that the mine is going to close before 2020. Well, it's 2017 now, so when we first started offering Argyle pink diamonds, it was 10 years ago. And the prices were less expensive and have moved up substantially. Now we're getting to a point where we're only 3 years away from this mine closing, and we believe that the prices of Argyle pinks and all pinks are going to skyrocket once this mine closes down because there's no more pink diamonds to be found. They've looked and looked and looked, and they cannot extend the mine any longer than they have. And out of this particular mine, which produced 30 million carats of diamonds a year, almost all of those were low-grade industrial white diamonds used to cut other diamonds. Only a handful of diamonds were these pinks. But I got to say that Argyle and Rio Tinto did a phenomenal job marketing their pink diamonds because every year there's the Argyle Pink Diamond Tender. And what they do is they take probably about 40 or 50 of the very best diamonds that came out of the mine that year, diamonds that started a half a carat and go up from there. But the fact is that very few diamonds are over a half a carat that come out of the Argyle mine. They're actually known as the most concentrated form of wealth on earth because 95% of the pink diamonds that come out of Argyle are under a quarter carat. So you're talking a small diamond. If you looked at a carat is about the size of your baby fingernail, then a quarter carat, obviously you can tell the size of that. But these diamonds are still extremely valuable and very, very rare. And now that the mine that produces these beautiful gems is going to close down, there won't be any more. It's like economics 101. When the demand for a commodity is high and the supplies are very low, the prices go higher. And that's exactly what's happening in the pink diamond market right now. So looking at the Argyle intense purplish pink that we have as a feature diamond, first of all, it's a pear shape, which is extremely rare. Very seldom will you see a pear shape. They're more difficult to cut, and they're a little bit more expensive because of the rarity of them. Then you've got the color of this diamond. It's a fancy intense, so it's got high saturation, and it's a purplish pink, so it's got a little bit of purple in it, but it's got a lot of pink in it. And by the way, purple and pink are two of the rarest colors you will ever get. To get a pure purple diamond is almost impossible today. So that diamond is extremely rare because as a secondary color it has purple in it, but the primary color is pink. Then look at the size of it. It's over a .40, and 95% of argyles are under a quarter carat. So this is almost a half a carat diamond, which is considered a very large diamond for argyle pinks. Most of the diamonds that come from argyle at the tender are between a half a carat and a carat. A carat is a very large diamond if it's an argyle pink. Now, back in 2002, I attended the argyle tender and was able to get a 2-carat vivid purplish pink argyle, one of the biggest argyles that ever came out of the market, and it was vivid in color, and that diamond has increased more than almost any asset that I have ever invested in. And we've had some investments that have done tremendously well. But these diamonds are going up and up and up. And once the mine closes, the prices, I think, 2 or 3 years later, when none of these are available, are just going to skyrocket. Now, the important thing is that owning diamonds is not a short-term thing. You don't buy a diamond and sell it in 2 or 3 years. You're just not going to make, it's not that kind of investment. It's best to hold as long as you can. If you don't need it for yourself, you pass it down to your children. Best example I can give you, we've talked about it on many shows, is Shirley Temple's diamond. Her father bought it for her in 1940. It was a deep blue diamond. He paid $7,100. Now, that was in 1940, so it was 77 years ago. Actually 76 years ago that he bought the diamond, because the diamond sold in 2016. But within that period of time, within that 56 years that diamond was held within the family trust, it went from $7,100 to $25 million. So that's what I'm talking about. You know, the fact is not every diamond is going to give you that type of return, but the longer you own them, the more and more and more they go up in value. These argyle pinks, the longer you hold on to them, the more and more money you're going to make. With my children, and especially my grandchildren, I have 4 of them, I put away diamonds for their future, not stocks or bonds or cash or anything like that. All those things can be gone. But a diamond will never decline in value, not a high-graded colored diamond, never going to decline in value, only going to go up in value over a longer period of time, can be sold in other currencies. So if the currency that you in the country that you're in and you don't want to sell it there, it can be sold in the States or Europe or China or Japan or whatever, wherever the currency is stronger. And then on top of that is portable private wealth. If guys like Mark Faber were correct, and the whole world started to implode financially, it's those that have hard assets that would be able to start all over again. Those that have stocks and bonds and cash may not be able to, and we saw that in 2008 when the Dow plummeted, the currency markets were dropping substantially, everything was going haywire, people didn't know what to do, but the stabilizing investments were really gold at that point, and diamonds. Diamonds did tremendously well during the 2008 to 2011 period when all else was falling apart. So, again, Randy, at this point, there's no doubt that there's fears out there. There's no doubt that there is potential for catastrophic situations happening in the paper markets. We've seen it happen many times before. Myself personally, I don't want to be involved in it. I don't want anything, any financial involvement whatsoever, and I don't want my clients in there. There's much better investments you could be in at this point than investing in stocks. You're going to lose your money. 90 to 95% of people do. Retirement savings plans are doing horrible, and if the stock markets plummet, the retirement savings plans are going to go negative. So, again, most Canadians will agree with me that the retirement savings plans have done horribly over the last decade. Meanwhile, back in 2004, we introduced some amazing coins. for example, another alternative asset along with our diamonds. Now, coins, we brought these Tiffany coins, these magnificent 2-ounce silver Tiffany coins, and they had Tiffany glass inlays in them. I thought they were beautiful, so I bought whatever I possibly could, and I let my clients share in these with me. I believe I was able to buy 10 of them, and we sold them for $300 a piece. Do you realize that I went back a couple weeks ago to try to find if any more of these Tiffany silver coins were available? I found one of the 2004s that I sold back in 2004. I sold it for $300 to my clients, and they're now selling, if you could ever possibly find one, they're over $6,000 a piece. So from 2004 to 2017, these little coins that we paid $300 for are now $6,000. Now, that's the type of returns that I'm talking about. On our auction coming up, we have some of the most amazing diamonds. We have the most amazing Tiffany coins. I went out and found, and I paid the price for them. I paid, $2,500, $3,000, $5,000, $6,000 for coins that I paid, $200 and $300 for 13 years ago. And the reason I bought them again, because you can't get these, and they're just going to continuously go higher. And not only was I able to find the 2-ounce Tiffany amazing coins that went up from $300 to $6,000, I also found the kilo coins. And those are almost impossible to get. They're kilo Tiffany coins with Tiffany glass inlays. They are worth fortunes. They are the most beautiful collectibles, and these are the type of investments that I'm talking about. My clients make over 25% a year. Do you? My clients make over 25% a year in private, hard asset, alternative asset investments with my company, and nobody's making that kind of money today. So if you need the income, if you need the growth so you can one day retire, you need to get in touch with me. Where all other investments at this point are suspect, they're not doing well, there's a potential for doom and gloom. Everybody's talking about the potential of a huge stock market plummet. Get out of those markets. We've seen it happen so many times. There's no reason. It doesn't matter what the name of the investment is. It's what's going to give you the biggest return on your invested dollar, and that's alternative assets. Diamonds, coins, art, all those type of investments. We have major investments in rough-colored diamonds that are just doing tremendous for our clients. If you're looking to retire one day, you're never going to do it by keeping your money in the bank, getting a 0.5% return, or putting your money into retirement savings plans. Everybody loses on those. You need to get in touch with me and let me put you in the right direction with the right assets that are going to make you the type of returns that you need to one day be able to retire. So, Randy, I was just blown away by the returns on diamonds over the last couple of years. I know you have some auction results for us that are absolutely stupendous. They're phenomenal. And then the returns of these coins that we bought in 2004 that have gone up, 2,000%? I mean, it's unbelievable, Randy. I've never been more proud of the recommendations that we've been able to make for our clients.
Very happy for the radio listeners that took our advice back in 2004 and invested in all the different coin series that you were able to get. One that stands out in my mind beyond the Tiffany coin was the Libertad, that big silver coin, a museum piece.
I love that coin.
Yeah, and
that is my
it is.
favorite.
It's just absolutely gorgeous and so hard to find. And then the other was the Vatican set of coins, which are the rarest of the rare because they put them in Pope John Paul II's coffin when he passed away, and that's pretty astounding when you think about it. Our featured diamond of the week is a 0.46 carat pear cut fancy intense purplish pink argyle. And what I did is go back, and I promised Harold that I would do it for you, our radio listeners, and every week really delve further into some of the auctions that have taken place this year. Now, Sotheby's had a magnificent jewels and jadeite auction April 4, 2017 in Hong Kong, China. Now, that was the sale where the pink star, one of the world's greatest natural treasures, was sold. and it set a new world auction record for any diamond or jewel when the Pink Star, a 59.60 carat oval mixed cut fancy vivid pink internally flawless diamond, sold for $71.2 million. The pink diamond was acquired by renowned jeweler Chow Tai Fook with the winning telephone bid placed by Dr. Henry Chen Char Shun, chairman of the company. The Pink Star has been renamed the CTF Pink Star in memory of the late Dr. Chen Yu Tung, father of the current chairman and founder of Chow Tai Fook, and commemorates the esteemed brand's 88th anniversary. Now, there was also another diamond that, another biggie that went. Lot 1784, a world auction record price for a fancy intense blue diamond. A fancy intense blue diamond and diamond ring set with an emerald cut fancy intense blue diamond weighing 3.13 carats, flanked by two step cut diamonds to the circular cut diamond set oval band. The diamonds weighed approximately 2.50 carats in total. This was absolutely gorgeous. The estimate on it was 3.8. It sold for $4.8 million. A world auction per price per carat for a fancy intense blue diamond. And it was called the Mirror of the Sky. Now, our featured diamond of the week, as I touched on, is a 0.46 carat pear cut fancy intense purplish pink argyle. Now, at auction, back in April, they had lot 1786, a fancy intense purple pink diamond and diamond ring, set with a heart-shaped fancy intense purple pink diamond weighing 3.3 carats. The estimate on it, $2.3 million. It ended up going for right around $2.6 million. Lot 1685, a fancy, once again, vivid purplish pink diamond and diamond ring, set with a cut-cornered rectangular modified brilliant cut fancy vivid purplish pink diamond weighing 3.74 carats. The estimate on it, 1.2. It sold for close to $2.4 million. So you can see some of the diamonds at auction that sold from that fancy, intense purple-pink category. Also, we have lot 1784, and it was absolutely gorgeous. Actually, lot 1696, an important fancy orangey pink diamond and diamond ring, set with a cut-cornered rectangular modified brilliant cut diamond weighing 11.44 carats. The estimate on it, $2.2 million. It ended up going for $2.8. Lot 1613, an impressive fancy intense yellow diamond and diamond ring set. And this was an absolutely gorgeous diamond. The estimate on it, $682,000. It sold for close to $1 million, $970,000. And Harold, those are just a few of the auction results, and we can send out the full auction results for naturally fancy colored diamonds, rare colored diamonds that we have from that auction. But the big ones were the CTF Pink Star selling for $71.2 million. And then you had that world auction record price per carat for a fancy intense blue diamond, $4.8 million at auction. And these are some of the diamonds that are attracting attention on an auction basis. And it's not a surprise, as Richard Russell was quoted as saying, another high-class area of transportable tangibles is diamonds. And obviously, diamonds are portable private wealth. And you can move $10 million worth of diamonds in the cuff of your trouser. Jewelry is an investment you can wear for 30 years, then sell. What else can you do that with, according to Chris Delgado, who is a jewelry expert? And one of the other quotes we have this week from Joseph Lipton, CEO of Secured Worldwide, diamonds are a portable alternative store of savings and wealth that are being increasingly utilized for diversification, and in a new and uncertain world where surprises will continue to catch us off guard, portability should be absolutely a very important part of an investment, should be understood as diversification. The ability to easily move savings and wealth is not a feature of precious metals, real estate, or most collectibles, but it is for diamonds. And Harold, that was one of the things that when you brought rare colored diamonds to our attention back in 2005 with your website, rarecoloreddiamonds.com, you told us, real estate in your pocket, portable wealth. And if you're ever in a position where you need to get out of Dodge, this is one of those assets that is a must-have.
You better believe it, Randy. And again, those auction results are phenomenal. And the fact is that where the highlights are obviously the multi-million dollar diamonds, but you can see that a lot of the diamonds, the lesser expensive ones, sold for percentage-wise much more than the larger ones did. So again, I'm a firm believer that you need to own assets that are, especially today, with the way the world is and as frightening as it is, with a new president that is not a politician, that, things could really happen to the financial markets because of that situation, along with what's happening all over the world. Nobody's doing well financially. So the fact is that you need to reevaluate how you're investing and then look at what works and what doesn't work. And what doesn't work right now are paper assets. Even though the Dow is over 21,000, most people are not making money in it because it's only a few stocks that are actually doing that. Look at what's happening in the retail markets. Do you realize that soon retail is going to be gone? To me, I'm absolutely dumbfounded by what's happening, that all of Sears stores are closing, and there's so many major chains like Sports Authority and all these companies that have massive amounts, 400, 500, 1,000, are all closing down. That's going to wreak havoc on the employment market. It's going to wreak havoc on the real estate market. And it's going to hurt the economies tremendously. And a lot of this is going on in North America, in both Canada and the United States. So, again, things are changing, and we need to stay on top of them. I get calls from people almost every day, people that listen to our show for the last 15, 16, 17 years, and are surprised when I pick up the phone and actually speak with them, because that's what we do. There's no egos here. Everybody is important to me and to Randy, and this radio show has been on for 17 years now. So, again, I'm very pleased with what's happening in the rare diamond market and in the collectible market. Our diamonds, we have been talking about our auction for about 6 months now. The fact is that we have two auction sites. One is a live auction site, and one is a new auction site that is going to go ongoing for over a year. All we're going to continue to do is keep that auction going and just adding new products as other ones sell. On this auction coming up, and it definitely will be in July, we've done all the tests on it. We are now just getting approval from Facebook and YouTube for advertising and all that. We're going to start the auction off with 10 pieces, but continuously add every single week. On this auction coming up, we have Elizabeth Taylor's brooch, which is worth a fortune. We have an over 2-carat Asher cut, vivid yellow, flawless one, the rarest yellow diamonds ever, is going up for auction. We've got some amazing kilo silver coins. One of them is a Libertad. One of them is an Aztec calendar. We have a one-of-one Longines men's watch. And we will continue to add diamonds and other pieces. We own Diamante Atelier, which is our jewelry company that has over 3,000 pieces of museum-quality piece jewelry in colored diamonds. We're going to bring all this available to all of our clients. These are the best investments and the investments you want to own, because, number one, they're beautiful and they'll go up in value, but number two, you can wear and enjoy them. So again, I know a lot of people have been waiting for our auction. I can assure you it's coming up in July. It was a tremendous amount of work building this new site and testing it. It's working beautifully. We've got the right advertising coming. We're going to bring in new clients from all over the world. We're spending a fortune on this auction. So again, thank everybody for bearing with us. I know a lot of clients in Canada are some of them are on hard times and need to sell some diamonds, and we will put them up on the site and help you with them. Anyways, again, the auction is coming up in July.
Harold Siegel, happy Canada Day 150. Happy 4th of July. Thank you for another great show and your knowledge. Have a great long weekend.
My pleasure. I wish everybody a wonderful weekend and a very, very profitable day.
Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.